Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. On the show today, it is a bit of a merger Monday. Three big M&A headlines we are watching this morning, two of which are causing some pretty good sympathy plays in the biotech sector. So we'll talk about that. Talk about earnings. We have Halliburton, UBS, and Wynn this morning. Netflix after the bell today, and we'll cover the biggest ratings changes from this morning and over the weekend. Two guests for you this morning. First up at 8:15, we're going to be joined by Kiana Danielle. She's the CEO of Invest Diva. And then at 8:35, we're joined by Craig Johnson. He is the Managing Director for Technical Market Strategy at Piper Jaffray. Joel, tell us how we're doing this morning in the S&Ps.
Well, the government shut down, but the markets aren't here. S&Ps traded down $1 here, 28.10, coming off that old-time closing high of 28.11. Keep an eye on that as well as your high print from Friday at 15 even. Coming on the downside, 0.2 even is your pre-market low. Let's just look at Friday's intraday low at 99.75. That would be your bogey on the downside. Crude trading in the red by 9 cents, 63.22, just hanging out over $63. Won't quite break that level. Gold down by $2 at $13.31. Silver pretty much unchanged at $17.02. And I didn't have my Bitcoin price. Haven't looked at Bitcoin much this weekend. And we got Bitcoin trading, I'd say an 11,000 handle. Yep. 11,249.77. Dennis, you're going to start us out. You got some good news to start today. You go with the Lions hat. Look at that. He switched.
Hey, mix it up. Represent the D, Joel. We got to represent all the teams. And congratulations. Eagles in the Super Bowl. What's with that? Wow.
Do we have, same Super Bowl. It's 2005, right? Spencer, you mentioned that when the Patriots played the Eagles. We do have the GOAT, Tom Brady, your Michigan grad, the greatest of all time. 5.5-point favorite to win the Super Bowl. But, man, the Eagles' offense did look good. We'll see what happens in the big game.
My buddy's an Eagles fan, so Phil, congrats. And we know Jim Cramer's an Eagles fan, too, so congrats to Jim Cramer, too, on making the Super Bowl. It's going to be a good one. Yep. Let's move into Merger Monday, though, here, and it is serious here this morning. Actually, I'm benefiting from one of these. I've got BIVV in my investment portfolio. Had it from a spinoff from Biogen, but actually a couple months ago, it was dipping down, and I analyzed and I added to it. Mainly because it was a small position. I had the Biogen, and they gave you a little piece of BIVV. And I went and did the research. I'm like, well, they got some growth there. They got that hemophilia drug. I'm like, you know what? A little speculative biotech in my portfolio wouldn't hurt. So I bought some more, I think around 58 BIVV. Yeah, and it actually dipped after that. That was back in October. And it dipped back down to under 50. And I was thinking at the time, why did I buy more of that? And obviously I'm pretty happy I did now because getting taken over here this morning. Spencer, the news.
Yep, Sanofi is buying BioVeritiv for $11.6 billion. Comes out to $105 per share in cash.
So that's a nice premium I'm getting there this morning. Pretty happy about that to come into that. It's, I've been needing some good news because I've been on a little bad luck run on news hitting against my stocks lately. So this one hits for my stock. 64.11 the close, trading 104.41 this morning. I am going to be selling in my investment this morning because I don't stick around for the last 60 cents. So when the market opens at 9:30, I'll probably jump in and dump that out of my investment portfolio. So nice pop for me here this morning, though, getting that lift of 62%.
Did you get the memo a little over a week ago when we had a gap up?
No, I wish I did.
From 55 to 58. Street leading the right way on this one. You also had a real big day on January 11th where you rallied from 58.75, 62.71. Be interesting to check out, see if there were any news on the stock that day. I'm just going to take a look because I don't remember this one being rumored. I don't remember. Now, the latest news I have on this thing is December 17th. So nice move, Dennis. Congratulations. Hemophilia stock, drugs are blood. I talked to Lisa about it. She said, in males, blood coagulation, it's a big problem. Is there anybody that might be getting hit on this that maybe had a competing drug, or any sympathy plays on this?
Well, there's always going to be sympathy plays. And I just think especially, and let's go to the other news here today and we'll group them together because we got Juno getting bought too. And you know what I said to myself last night? And I think a lot of people would have said this to themselves this morning as well. I said last night after the BIVV news came out, I'm like, you know what? That Juno premium, if they take it over, is going to be a lot higher. And I said to myself, if I can get a shot, I'm going to buy Juno this morning, just because I think, with the growth, obviously it's got growth there, but just with the premiums being paid there, I'm like, this could be even $100, like Citi was saying. Ends up, the news comes out before I get a shot to take, before I get a chance to buy the stock, but ends up getting taken over by Celgene officially this morning. What's the deal news on that one, Spencer?
Deal worth $9 billion total, comes out to $87 a share in cash.
And stock is trading up at 86.33 this morning. So again, congratulations to Juno Therapeutics shareholders. They had to hold for a few days through the rumors, but they're being rewarded here this morning. We did say it last week on the show that I was speculating that, a lot of times when these things pop up from, 45 to 70, you think, well, most of it's baked in. But we did say yesterday on the show, I thought if it was going to get taken over, it was going to be higher. So I kind of said it was a coin flip. If it doesn't go through the deal, this stock probably goes back down to 50. If it does go through, I think, it could be upwards of, $90 or $100, I was saying. It ends up being at 87, so it was a coin flip. But, there was rumors where there's smoke, there's fire, obviously, and Celgene needs growth. I think there's a lot of other, of these big companies that are looking for growth here as well, apparently. And there's a lot of little biotechs that could benefit from these moves here today. So Bluebird Bio is one you think of immediately. And that was one I thought of originally when the Juno rumors started. I mean, this thing really hasn't taken off that much. We're up 4 points here this morning, but I got to think there's probably a few people sniffing maybe potentially in a stock like Bluebird. This is one that if obviously if they're looking for growth, Bluebird's got some, so there's the potential one for you. Other ones, if you just want to fly through a few of these that I had on my list, you can think Sarepta Therapeutics, even SRPT. It's got some growth. It's trading up 70 cents in the pre-market. CLVS is another one. Clovis Oncology. It got a pop on the Juno rumors last week. It's popping here again this morning. You could jump over to Sage Therapeutics. That's another one. SAGE. But any small little biotech with some growth to it right now, those are ones that obviously could be in play.
What was that one? Jonathan Wexler was on the show on Friday. Dennis, wasn't there one you were trying to chase a little bit that he mentioned? What stock was that? And I think there was some news on it. What was it? HGTH? Was that?
Yeah,
it?
You know what? That's real small. So no, that was from yesterday. And actually, I decided that I was gonna. We had who was on our show? Who was the? I listened to the interview. HTGM is what we're talking.
HTGM. It was Jonathan.
And they had so they had some good drug news, and then they have an offering. You often see these stocks, have an offering afterwards. So they raise money to do the trials. They got to raise money, to fund the drug if it's even approved. Usually they will do, and once you get the good drug news, often do an offering to raise money for that, for the drug. So the stock had the offering priced at $290, and it was pulling back that morning. Yet this was Friday morning, and I'm like, you know what? I put a bid out there in my invest portfolio at $311. I should have went higher because it opened at $315 and never looked back and went straight up. Pulled back at the end of the day, $329. So I was hoping I'd still get a shot in the lower threes. I don't know if that's going to happen. It's up 6% here this morning, but I don't know if that falls, as much as, the ones directly as we were just talking about, but it's a smaller biotech. And I didn't even know really about the company until we had that guest on Friday, but I'm like, well, he's done his homework. I don't mind the chart here. And they got some good drug news. So that's why I was sniffing around, thinking about buying HTGM. I would still like to buy this in the lower threes in my investment portfolio.
You're on the other end of this trade too, in this takeover, being a Celgene owner, trading down 90 cents.
Big premium.
Yeah, big premium. I mean, this thing has been real sleepy since I I think it had a bad trial, then I think it had bad earnings, been in a trading range here. The low of the move, 94.55, and then someone has their foot on this thing at the 111 area, just kind of hanging out in the middle. So for today's action, the street's still digesting this move. Let's see if we can get green on the session. 102.65 was the close, trading down 90 cents. So, at this point, the street is just not overly alarmed that it's overpaying for this transition. But let's see what happens once the real liquidity comes in at 9:30.
Yeah, I don't know. Obviously Gilead got the pup, but Gilead needed some growth. Celgene's got a lot of drugs, cooking, so they're paying a huge premium here. It's not surprising. I wouldn't be surprised this thing tests 100 here today. I'm not coming in buying Celgene on this news. I do own Celgene in my invest portfolio. I've had it in there for a long time, originally buying at $27. So I'm sticking with CELG. It's been one of the best stocks in my investment portfolio, but 100 is critical for it to hold here. I think it's going to test it today. And I think, with the premium being paid there, I'm a little bit concerned that there could be obviously some people, saying that's a pretty hefty premium. Maybe we're going to sell a little bit this morning. I think that the big thing, I'm just saying is it's not the big biotechs that, you want to be saying, oh, these are all going to start running. Maybe it kickstarts the whole sector, but it kickstarts any smaller biotech with growth because we had two mergers here. We had the Kite merger, obviously, last year. We've had a couple other smaller ones. I think the smaller biotech stuff is hot. We should probably get that guest that we had on, last week, get him back on again. Or maybe, we could even grab who's the other biotech or analyst there?
Paul Yu.
Yeah. Let's see if we get Paul maybe back on, this week or next week. And maybe he's got some targets for us as well, because I think there's going to be some stocks that are going to be in play potentially from this.
If Celgene does dip below 100 into double digits, be aware they had a double bottom, 98.44, 98.84. This was back on November 14th and 15th. So if you do slip under 100, keep an eye on that double bottom.
Jump over here to other stock news and other merger news, and we got one more not in the biotech sector, and that's AIG and VR. Spencer, give us the details on this merger Monday. Wow.
Yeah, a lot of them this morning. AIG is buying Validus, ticker VR, for $68 a share in cash.
And this is another cash deal that obviously goes off the table. VR trading up 21 points in the pre-market. I own AIG in my invest portfolio. Again, I've had that one in there for a long time as well. I'm in from the lower 30s, so I'm sticking with it. Stock $60.20 is trading down $1.40 on the news. It's a premium, and this is typical. This is typical, really, of the market. When you pay a big premium, usually the acquirer gets hit. So not surprising that AIG, when they're paying this big of a premium, is down slightly, at least in the pre-market. Needs to hold $60.
All right. I did get a little dip here. Your pre-market low comes in at 60.15. Going to the daily chart, you got a pair of lows in the lower 60 handle. At 60, actually, you have three of them here. Four lows between 60.14 and 60.25. That coincides with your pre-market low, as long as a nice round number there. As far as coming back on the upside, I will only have it trading down 35 cents. Nice triple close area consolidation, at least on a closing basis. Three closes at the 61.50 area, and also three highs. So coming into some resistance, really needs to bust above 62 to get a little more run to the upside. All right, it is 8:14, 38 seconds. You want to bring on our first guest?
I do. Keanu Danielle has been on a while, actually. She is the CEO of Invest Diva, and we'll be right back with Kiana.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel and Dennis Dick. And we are joined by Kiana Danielle. She is the CEO of Invest Diva. Kiana, first off, we have to say congratulations there.
Thank you.
It looks like you have an expiration in March, right? What's going on?
I do. It's actually on, so we were having a baby girl. She's due on March 8th, which is International Women's Day. So very appropriate to invest Diva.
Do you have a name yet?
Yes, but that one is a surprise.
Okay. All right.
Is the name market related?
You see, I didn't think about that. I should have got my husband on board on that one, but no, it's not, unfortunately.
All right. So let's just, you were on last year and you talked about a couple tech stocks. One's continuing, the other's kind of just hanging out this year. Last year, you talked about AMD and NVIDIA. AMD, the rally's kind of cooling here. NVIDIA still seems to be moving up higher. Any thoughts on these two issues?
Absolutely. So, AMD and NVIDIA worked out very well for us last year. It showed us returns up to, NVIDIA was 455%. But AMD, as you said, exactly, it is cooling down a little bit. And so the reason why it happened is that we're still slightly bullish. We're still trying to take like our final profits on AMD. So AMD and NVIDIA were like my top one among my must-haves in the portfolio last year, but we are now shifting towards to other tech stocks. And the reason being is that last year Intel was not really in the game, and AMD was really going at it with their innovation and their team and their leadership in the space. But as you know, AMD, first of all, Intel recruited one of the main key team members of AMD, Raja Kaduri, and that was a big hit, I would say, for AMD. And they are now, Intel is now really investing heavily into deep learning, AI, and it seems like they are taking over AMD in that sense. And that is why we're shifting now our investments from AMD to Intel.
All right, you got a target on Intel. I mean, you've had to gap up. It got hit. It had little problems with their chip security flaws here. Do you have a short-term or long-term target for Intel?
Yeah, so absolutely. So the security issues, in my opinion, they're more of a bump in the road, because what you really want to look at Intel, actually, they're aiming to even be a threat to NVIDIA in terms of dominance in the field as well. And they're investing heavily in the quantum computing and all of that. So with that, we started buying Intel at around 43. And it just today, actually, if you look at the daily chart and if you insert one of my favorite indicators, which is Ichimoku Kinko-hyo, it normally doesn't work that well for equities, but this one, it is interesting because it just broke above a very bullish cloud, Ichimoku cloud.
Ichimoku cloud, okay. We've heard that.
Yeah.
All right.
Yeah. So we try to combine basically everything in terms of technicals and fundamentals and market sentiment all together. So right now, there is a resistance, of course, for AMD, which is at 46.64. But our target markets, if we use the Fibonacci retracement, I'm just doing it right now. I'm planning to actually hold it long term. If there is a pullback, I'm planning to buy more. And eventually, the targets for AMD, for Intel, medium term would be 52. And then a little bit longer term would be 62, and the all-time high is actually 75. It could actually reach and surpass that level, in my opinion, if you hold it long enough. So we are long-term bullish with Intel in terms of Intel, and I'm not going to really sweat the securities and a pullback. I have buy limit orders to buy more, and I'm hoping that it's back before it goes higher up.
Now, another one in this space, and this chart's looking interesting, a newer stock trying to break out here over 1860, 1870, Cloudera, CLDR. Tell us what you like about this one.
So Cloudera IPO'd back in May, and so Cloudera was what they did brilliantly was that they didn't IPO too soon, because their biggest competitor, HDP, so they IPO'd a little bit earlier, and that's why they had a little bit of a, choppy. They're doing great right now, HDP still. But what we love about Cloudera, and still for this one, there could be a pullback, and because it's an IPO, and in tech industry, when they IPO, it's kind of choppy at the beginning. But we are, again, long-term bullish with Cloudera, and the reason why. So they have a great team, which includes inventors of Hadoop. And they've been doing great acquisitions recently. They bought Fast Forward Labs, which is led by Hillary Mason, which is a brilliant woman. And they have a very good talent, both in their recruitments and their investments, and their main focus was on Hadoop and how to manage big data for large companies. If you go to their website, you'll see the name of all the companies that are actually managing the data. So they're expanding very rapidly, and there is a lot of growth opportunity. So again, last year we did have HDP in our portfolio because Cloudera was not public. But now that Cloudera is public, we're trying to stack up while people don't really know about them and the prices are lower, and kind of switch to this one for a longer term investment.
We're on the line with Keanu Danielle. She's the CEO in Invest Diva. Kiana, I know I've talked to you about the currency markets before, but you said you could talk a little bit about cryptocurrencies and Forex as well. Let's first, talk about your involvement in the cryptocurrencies, how you got started, how long you've been doing it, and then we can get into some particular coins and your bullish or bearish projections on them.
Absolutely. So cryptocurrency, I was very late to get in on the game. When I was in Japan like 10 years ago, people told me, "Hey, buy Bitcoin." I was like, "What? I'm not gonna buy Bitcoin. That's too risky for me." So of course now I regret it. I got into the market. I partnered up with a news channel in the UK that we do research for them now in cryptocurrencies, and that really got me into the game. So the interesting thing about cryptocurrencies right now, well, as you know, so the top 20 largest cryptocurrencies by market cap erased almost all of their gains that they saw on Saturday, and last week we had like a bloodbath. Everything was down. So I'm becoming more and more interested in cryptocurrencies, but of course, we cannot apply your traditional analysis methods to cryptocurrencies. So for example, if you want to do a fundamental analysis, what are you going to do? There is really not much going on in the fundamentals besides a website with a message that promises to make capitalism better, right? So really what's moving the markets is like a sole player, because somebody goes on CNBC and says, "Oh, I see, I predict a 90% market crash on cryptocurrency," and everybody panics and everybody sells. So we see the sell-off. So the volatility is really, really massive. I am at the end of it. I have been investing and mining cryptocurrencies, and what I am basically doing is managing my risk by setting my buy limit orders at very, very low prices. So for example, Ethereum, it could very, very well go back down to, let's take a look at the chart, to limit order to support levels at 828, 695. But again, at the end of the day, it also has potentials to go back higher. So what I'm doing is I'm diversifying, and I basically try not to panic when it goes down, because I understand that I'm getting myself into a very, very volatile market, and I'm not investing heavily in only one crypto. I'm trying to diversify as much as I can, and I'm trying to buy low basically and sell high. I'm going mostly the market sentiment. One thing that is good about that is now changing in the market is that the market sentiment and technical analysis is actually starting to work. So if you look at places that, for example, Ethereum today, if you look at the chart, it is right at the 38% Fibonacci retracement level. So when it hits the lows, it's going exactly at the levels that a technical analyst would predict. So it looks like the market sentiment is at least on our side. So even though we don't have the fundamentals really on our side, we can manage the investment by looking at the technicals.
Wait, Kiana, did you say you're mining?
Yeah.
How exactly?
I mean, not me personally, but the team. Okay. I mean, we have set up a bunch of like mega computers and they're mining. Yeah, we're mining the most mineable cryptos at the moment.
Any thoughts on Ripple? Is that one that you're looking at that did surpass Ethereum for second market cap, now falling back? Any individual thoughts on Ripple?
So Ripple, the pullback was again inevitable. Ripple I like because, well, first of all, you can't mine Ripple. So that's one of the well, let's say drawbacks in Ripple. But what I like about Ripple is, again, their partnerships and their vision in the field of cryptocurrencies. And so that's the reason why I do believe that even though we are seeing massive pullbacks across, well, Ripple today is like just going down, and it looks like it's going to go back down to the support level of 0.86. But eventually, it looks like to me that Ripple could go back up to at least as high as 5. So the take profit, our highest take profit order for Ripple is at 5.10. But so that could take some time. But as you know, this is just a very, very volatile market. So when the prices go down, because there's so many people who don't know anything about cryptocurrencies just getting in because they heard about it, the volatilities are much greater. So the key is, again, not to panic when the prices go down.
We've been on the line with Keanu Danielle. She's the Invest Diva. Thanks for joining us. We'll catch up with you. Good luck there in March. And once again, great input. Thanks for coming on.
Thank you so much for having me, Joe.
All right, S&P futures, they don't care about the government being shut down here. We have gone in the green here just by a tick, 11.25. We are now 9.25 points off the pre-market low of 28.02. Only one number only on the upside, 28.11.50. That's our high, but the high from Friday, 28.15. Dennis, let's bring Dennis back in here and see you got anything accomplished here in 10 minutes. Did you enjoy that interview, Dennis?
Oh, great interview. I mean, I actually wrote down a couple of tickers that she was talking about as well. I've been looking at the Cloudera chart too, CLDR that she just mentioned, and it looks like a nice chart too. Had that on my list last week, so as soon as she mentioned it, I was like, look, I brought the chart up again. I mean, that's just a nice little uptrend starting a rounding bottom here. Obviously, it was a stock that had some problems earlier or later last year, but starting to come around here too. So I like the chart on the Cloudera one. You know, interesting interview. She had lots of good stock tickers there for us as well. So, yeah. So all right. Let's jump over 30 seconds away from imbalances. We'll jump over to that in just a second here. But a couple other stocks, that I had on my list to talk about here this morning. And one, which is going to report tonight, is Netflix. And NFLX, everybody's going to be watching this report. The stock has been running up a lot into the report, and we know that is always an issue, so they need to blow it away. But not saying Netflix can't blow it away, they definitely can. But it's went from 190 to 220 here, basically in 2018. So it's had a big run up. I would expect it to run up again today into the report after the bell. That's when we're going to find out what the Netflix numbers are.
All right, let's just take a look. Trading up $1.86 at 222.32. Your all-time high was made a few sessions ago at 226.07. Your all-time closing high was made on that same day at 21.53. And also had another close at that area, but we're trading above that. Take it for what it's worth. Barron's, Tiernan Ray this weekend was, talking about, Apple, bringing all this cash over, what would be a potential acquisition? I don't know. I don't know if they go out and pay something for Netflix, but they felt it would fit into their ecosystem. So another day, you got a big report coming out. All-time high, 226.07 here in Netflix. All-time closing high, 221.53. Dennis, tell me about the buying balances here, because
that's mixed. It's mixed. Yeah, and you know what? It was an interesting Friday. Obviously, we had Friday expiration there, and there was some fireworks. There were a few stocks bouncing around there on the close. Just looking here, It actually looks like a lot of sell imbalances here this morning. We are early here yet, so those things can change very quickly, obviously here. But if I'm just looking and give you some early indications, Morgan Stanley 345,000 to sell. That is significant for Morgan Stanley. So keep an eye on that one. That's one of the biggest sell imbalances I've seen in Morgan Stanley in a long time. GE, which cannot catch a break. I mean, this morning they were catching another downgrade. I don't even remember who downgraded them this morning, but they got downgraded again this morning. It's trading down the pre-market. 1.3 million to sell. It's just a liquidation event going on here in GE right now. Everybody is selling it out. I'm almost tempted. They started hitting the credit in GE. You can see even some of the preferred stocks have started to get hit in GE. I don't know what's going on there, but they're acting like the company's in trouble, like financially in trouble and going out of business. So maybe that's the case. I hear GE is really in a lot more trouble than even Deutsche Bank thought originally here. Unbelievable down move here, and it's just ugly. I still have this in my investment portfolio. Wish I would have sold it at the end of the year to realize the tax loss. I considered it, had it in there for so long. I might take the loss here eventually. Let's just move on to some other imbalances too. We can talk about other strategies as well. CL 93,000 to sell. I'm talking Colgate, Palmolive, not crude. CL went ex-dividend here today, but somebody wants the hell out this morning. Coke 106,000 to sell. Verizon 38,000 to sell. Got upgraded Scotiabank, but those aren't usually very influential. Schlumberger, SLB, big buy imbalance for this one. Dead catch and upgrade here this morning too. 186,000 to buy in SLB. So somebody coming here this morning buying SLB heavy. Full disclosure, I am long in my trading portfolio this morning. SLB, I've gone on against Halliburton. Merck, MRK, 19,000 to sell. That's pretty small actually. Nike, 137,000 to sell. That's significant. Some big ones this morning here, Joel. Alibaba 42,000 to buy, Bank of America 118,000 to buy, Square 49,000 to buy. There's a few of those for you. If you want any individual stock, let us know too. I can bring up any stock on New York and give you the imbalance information. Obviously, New York imbalances come out at 8:30. NASDAQ imbalances don't come out till 9:28. That's why we never talk NASDAQ imbalances, because they come out too late.
Boy, don't know where to go here.
The
GE one, I mean, oh my gosh, when this took out 17 and a quarter, it has just been absolutely lights out. Also, I was looking at this thing on the monthly chart here, and I mean, this thing it had a small up month in February of 2017, but has been down in every other trading month since January 2017. So you surely like to see that trend broken before trying alongside. Joking around with you on Friday, you were talking about a target on the downside, and we go to the monthly chart. What was 568 was the low in during the financial crisis. So a lot of trouble.
They got problems. They need somebody to come in and say something good about it, and it just hasn't happened. I mean, it gets more news. Analysts are bailing on this thing now too. Check out the preferred stocks. These typically do not move unless there is credit worries. Check out GEK. Got crushed 3 days ago from $25 down to 22.61. Did bounce, but still looking ugly on the chart. There's 3 traded preferreds. GEH is another one. And these aren't actual preferred. These are like capital. These are notes. So this is actually just trades just like the bonds. GEH 25 down to 22 and change again. And then the other one is GEB. Same story. These 3 trade together very closely. But when you start seeing this happen, you got to go out to, like just go out long term on a stock like GEB, and it's not a stock; it's a traded corporate note. You got to go back to 2013 when this was really getting hit last. And, that may have been just some other issues too. Sometimes these things will obviously move around with interest rates as well. But this isn't interest rate concerns. This is credit concerns here now. And this is the first time we've actually heard about, credit concerns at GE. It's been more just, okay, they got to cut the dividend. They need, they got some problems with their businesses. But now we're starting to see credit concerns. It's starting to get major problems at GE here.
All right, real quick for Are You Correct in the YouTube chat wants to know about Kroger. What an amazing run this had since your nice run. Got under $20, actually $19.89. So if you like holding on to looking at the whole number, we're on the rally back and we've filled the gap. I mean, you're starting to get into the 30 handle. You haven't seen 30 in quite some time. Maybe a target if you could take out the sellers at 30. Dennis, can you see anything in the book at 30 or is that, I mean, it went off the board at 29.70.
Well, I'll go check. I'll check out the book.
I will tell you, I'll give you 2 numbers above 30 because that's not like a huge huge mover. 30.28 was your close on June 14th.
Oh, yeah.
And then you had a high that day of 30.54. So it's climbing, getting back into the 30 handle. Those are a couple different targets. Also,
major.
Yeah. Also, just
major stuff on the book, Joel. There,
major buck at 30.
Not 93,000 shares. It's huge for Kroger. So that's your level. That's the level it's got to take out. And we talk about this so much, and we don't always explain. Like with the book we're talking about, that I'm talking about the NYSE Open book, talking about the orders that are on the book, that institutional traders still, obviously there's 13 different exchanges, lots of different places that go to liquidity. I'll tell you, a lot of the institutional traders are just they're old school, and me myself, I go to New York a lot of times too. A lot of times we want major liquidity. Sometimes there is major liquidity in the New York book, and a lot of times you'll see institutions put orders out there long term just to sit out there and say, if this ever gets out there up to this price, I'm going to sell 100,000 shares.
I got to interrupt you here. We got a guest waiting in the green room here. So we got to bring on Craig Johnson for Piper Jaffray. We'll pick up that book discussion right after the break, Dennis. Welcome back, traders and investors, to Benzinga's PreMarket Prep, brought to you by Benzinga Pro. Little problems here tracking down Mr. Johnson here, so we are just going to go back discussing the markets here. Dennis, are you with us?
Yes, I am. I'm here.
All right.
So let's jump back into that book talk until we hunt down our guests there. So we were talking just, and I was going to jump into like the Kroger book just because you said, can you go to the book and see what's in there? And some people, may not understand, what we're talking about. So again, when Joel talks about the book, and every exchange will have its own book. I just feel like the New York book often has some size and some major liquidity in there, especially when you check it in the morning. When you check the book during the day, it's thick with envelope orders. And what those are is high frequency traders making markets. And it just thickens up the book, and it's all kind of fluff and not really solid. I wouldn't say it's not real. It's not solid, meaning those orders move. They're enveloping the current price of the stock and they're moving around a lot. When you look at the book in the pre-market, it's more solid. These are orders that have probably been out there for a while. It's people that actually want to sell the stock or buy the stock at these prices, not moving around these orders. So, when we see a big technical level, something that hasn't been to for a while, like Kroger, $30, you think, man, there's probably going to be some institutions willing to lighten up there. You go to the book and look at it, and boom, you can see it, 93,000 shares. So you'll have technical analysts that, will look at that. We like to look at the book itself because it kind of sometimes gets ahead of the technicals. And what I'm telling you is it's going to take a lot of money to push Kroger through 30. If there's 100,000 shares, which is this morning's 93,000, so you might as well call it 100,000 shares. 100,000 shares times 30 is $3 million. So it's going to take at least $3 million worth of stock to push it through $30. So that's the issue with Kroger. It takes that out, then it's on breakout mode again. And a lot of times what you'll see is stock will go up there, test again, it doesn't get the money to take it out, try again, doesn't get the money to take it out, and then finally takes it out. And you have the technical trader that'll say, oh, well, that's a breakout, and now we see it on the technicals. Well, we're getting ahead of the technicals because we're telling you it's going to struggle there. Is it going to get through it today? Possibly, but it's going to take $3 million order to push it through there. And that's significant in Kroger. They don't just have $3 million orders floating around in there. Something like, Intel or something like General Electric, $3 million is nothing. A stock on Kroger, $3 million is significant.
All right, let's just go back, take a look at the markets here. S&Ps, it looks like settlement's going to be your battleground. 28.11 was your close from Friday. That was your all-time closing high. We just peaked our head above there, went to 12 even here just a few minutes ago, but back down in the red here. Also, let's just real quick talking about the the government shutdown and everything. Once again, going back to Barron's historical significance, not really hasn't affected the market in the long term. Just going back historical standards, the market is still performed pretty well in the years where there's been government shutdown. So keep your eyes on the Benzinga Newswire for news on that.
Just talk about talk about this for a second. So here we are in a situation where the government shuts down. You would expect a normalized market for the S&Ps to be down significantly. They're not even down at all this morning. What do you think is going to happen when they reach a deal tomorrow or the next day or the next day? What do you think is going to happen?
Rally.
We're going to rally like 300 Dow points. So it's like the market cannot lose. This is not good news. The government's shut down. They can't get a deal done. They're going to get a deal done. And when they do, we don't sell off when they don't get a deal done, but we rally like hell when they do. I'll tell you right now, when they announce this deal, the market's going to be up significantly. This market is just unbelievable. It finds every excuse to go higher, even in bad news, in the face of bad news. It doesn't go down. Well, you can't fight this tape. I mean, I threw in the towel on most of my shorts here a long time ago because it's too hard. Eventually, there's going to be a market where we will be able to start shorting stocks again. But right now, the tail of the tape is just higher. And when they don't go down on bad news, when stocks don't go down on bad news and you're expecting, that to happen, I mean, you're fighting the tape so much. Don't fight the tape. Just go with the flow. And that's the main thing I can tell you here today is that the flow just continues to be higher. Every pullback, except in a stock like GE. GE is its own animal. GE looks like it's on its death march here. And I heard actually Jack Welch was going nuts. There was an article, I don't know where that article I was reading over the weekend, but somebody was reporting that Jack Welch is just he doesn't even want to go into media right now because he's so ticked off.
That was from
the situation.
That was from Gasparino.
It was from Gasparino. Can you imagine being Jack Welch? Here you are. You put together possibly the best, conglomerate, the best, corporate business for years. In 2001, you retire. And since then, the stock has been straight down. Obviously we had, it was maybe a bubble back, 1999, 2000. So maybe the $60 price in GE wasn't warranted because the, PE multiples were high on everything then. So ML was a little bit of a victim of, market PE contraction. But when you look at, the performance over the last 17 years of most other stocks, they are higher. And GE high, $60 back in the year 2000 when Jack Welch retired. Now $16. He's like not happy. And I don't blame him.
All right, breaking news here. I guess out a little bit ago on ANF, Amercrombie and Fitch. providing some good guidance here. And I think it was Dr. J. I don't know if Dr. J's around today. He was asking on that stock on Thursday or Friday, and it was looking itchy. Spencer, what's the news on Abercrombie and Fitch?
Yep, same store sales up in the high single digits. This is from the holiday, or this is what they see. They see same store sales up in the high single digits, and they also expect a large tax charge in Q4 due to the Jobs Act, Tax Act.
Nice pop.
I mean, it's breakout mode. It broke out through 20. You're now in the 20s here again. I don't understand why the retailers are rallying, but we don't get paid to say why. We get paid to just go with the flow. And all the retailers, all the traditional box stores, even the mall retailers now are just hot as hell. I mean, okay, if you want to pick up one that I think, has been lagging because they had that bad report, Abercrombie and Fitch is gone. It's in rocket ship mode. It was $12 back in November. Now it's 21. You can put a stop at $20 if it starts to cut through there. Maybe that's how you play it, but you're chasing that one a bit. What is interesting to me right now is L Brands, because L Brands got killed on their report. They were one of the only ones. Its charting pattern is looking a hell of a lot nicer here now. It's starting to turn. If it can get back up above 51, Joel, if you could get in that gap area in L Brands at 52.44, you have that gap all the way up to 57.83. I mean, it starts to open up. So L Brands, what do you think of that chart? It starts to look interesting.
Technical. Here. I mean,
yeah,
Dennis, you should be out there lifting offers. I mean, come on.
I'm not gonna. Somebody is this morning because the stock. Well, actually, no, they're not this morning. It's 50.80 offer here this morning. It's trading flat, but somebody was lifting them on Friday. I've been waiting for a turn in this one. And, you always tell me, don't buy the stocks when they're going down. Start to wait till they start to look, consolidate, form a base and start to go higher. Well, you put a triple bottom in, almost a perfect triple bottom, 48.85, 48.87, and 48.87. I mean, within 2 cents, 3 lows of each other, that is a nice triple bottom there for L Brands. And that's your stop out point. So if you're buying it here this morning and saying, I'm going to pay 50.69, you got to risk it down to that low. So, I even go the day before that, maybe you risk it down, give yourself a little wiggle room down to 48.59. So say 48.50. If you're buying it this morning, if you could pick it up at like 50.50, we're down on the day. Maybe you risk 2 points and you put your 3 to 1 and you go for 6. I mean, these retailers are hot right now. Maybe this one catches a bit.
And another stock that's just been on a roll, and it was mentioned by our own Sean Udall a little over a month. Or we had him on year end, right, for our final show of 2017, and he liked Dick's Sporting Goods. 28.74 was that close. Now
showing life.
Yeah, it is showing life here,
yeah.
And boy, oh boy, we are unchanged here. Closed right near the high off the high tick. If I don't, if there's nothing in there at the round number of 34, man, you got some room on the chart here. I'd see another monthly high at 38.35, but that's on the monthly. So you can find some intermediate day levels in between there. Another stock I wanted to mention that was mentioned on this show by the Reverend Emmanuel Lambertson. Remember this Hibbert Sports, Dennis?
He was on fire with that call. The Reverend, when he was on, Joel, he was picking this up at like 12, 10 bucks. It got down there to it got down to 9.40, but he was buying with 2 hands down there, and it has turned. That stock is hot. HIBB.
That's HIBB. Okay, I couldn't remember what the
yeah. It's not it's not as widely traded as obviously a Dick's or something, but the Dick's is showing life too. All these big box stores were dead in November. They were had for dead. Everybody was selling them. Amazon was putting them all out of business. They've all turned. None have turned more than Kohl's. I mean, the Kohl's move is absolutely ridiculous in my opinion. I was on the record saying I like Kohl's the best of them all, but I didn't like any of them. Kohl's. So I don't know if that's good or not, but Kohl's has been on fire. Macy's, I said on Friday, I think Macy's can start to play catch up here. It tried a little bit on Friday to show some life. It looks itchy to me. It looks like it wants to go. But the only thing is you got to ask yourself, why haven't these participated as much? So maybe, there's more issues there or not. But if you're just looking at pure technical setups, I mean, the Dick's doesn't look bad. The Macy's doesn't look bad. The L Brands don't look bad. They've lagged a little bit here, showing some life. Nike had a huge breakout on Friday. I mean, Nike has been in a trading range for the better part of, 4 years, between 50 and 60. We're finally, well, I guess 3 years, between 50 and 60. We're finally above 60. Then we had some resistance here at 65. Now we break out there again. You subscribe to that theory, old resistance becomes new support. This $65, if Nike pulls back here this morning, is a hell of a buying opportunity, in my opinion.
All-time high. It took a while. Back in December of 2015, Nike hit a high of 68.20. It's taken a while to get back up there. I know it's made some runs at it. On the daily charts, we're pulling back here. Let's see what the volume is here on the pullback. A couple thousand shares have traded. But the only thing you got to be leery of here is you got almost a buck gap between 65.12 and 64.21. So maybe fall back in the lower 64 handle if that 65.12 is breached. But trading down in the pre-market, only 41 cents at 66.80. The close and the high from Friday, just like a lot of other things, right near each other, 67.21, 67.24. I think we had a catalyst on this. Didn't we get an upgrade or something on
Nike
on Friday?
Yeah, we did have something. And goldfish memory here.
Yeah, we had a Wedbush upgrade.
Wedbush upgrade
to outperform.
Yeah, that broke us out. And this morning we got a big sell imbalance. So 266,000 now to sell in Nike could be an opportunity. I mean, sometimes these sell imbalances, and often, sometimes they, are indicative of the news. But when they're out of the blue, sometimes, that is an opportunity. And you get a pullback anywhere in the 65 handle. I think there's underneath demand in this Nike now, so maybe it gives you an opportunity this morning.
All right, we do have can't go an entire day without a little blockchain news, right? And
multiple stocks.
Longfin announces the launch of commercial Zidu contract on the Ethereum blockchain. Stock is trading up nearly $4 at 47.16. You had this big run up as this thing. Is this the one that had the CEO that came on? Was this Longfin?
Yeah.
Was that the one instead of stock?
No, it was Long.
No, that.
What was that?
Yeah, it was. It was Longfin. Yeah, it was. He came on CNBC on day 3 of, when they, did their little reorg or whatever they did, or it came out. And after they had that blockchain news, when it went to 140, he was the one that said he didn't think his stock was worth that. So, and it did pull back after he said that. And it's obviously pulled back significantly from those highs. But yeah, he was the one that was saying, I believe it was, wasn't it, Spencer? He was on the CNBC.
It was. Yep.
And they grilled him and basically got him to say that he didn't think his stock was worth $100 a share, wherever it was trading at that day. And it came down as his comments were trading. It fell 20 points on those comments, like in the next 5 minutes, just after hours, just as those comments were coming out. And after that, the next day, I was joking, it came all the way back up into that area again. It's like, here it is, the stock. CEO says no, where that price, where he shrugs it off and they buy it anyways. I mean, that just shows you the mentality here. I mean, if you want to look at this thing, it has had a little bit of consolidation. Long term, I don't know if any of these things have the value that the market is giving them. But short term, you can't argue with the tape. And you started holding the $40 level. So from a technical perspective, as long as this thing stays above 40, maybe you try to make a run again. Long term, I want nothing to do with it. Short term, you can put as a trade. You can put anything on as long as you have an out.
And you also had some additional news. Announced a $52.7 million investment from an undisclosed fund. So double dose of good news here. I mean, the stock had the big rally, the consolidation. I'd be careful shorting this one, especially, if you just start to blast off the open. But Longfin moving again today. S&P's really repelled off that closing level of 11, even down 250 at 0850. So keep an eye on that if we get back up to 2811. That was your old-time closing high from Friday.
Couple other quick blockchain stocks to talk about. TEUM this morning, they announced a headline. Paratem and AirFox expand blockchain technology partnership. So this one obviously is already in the news before, but they're expanding it. It did trade up significantly. It's coming back down now. Also, I've got a headline from CNIT. These are coming from, we're down from the Benzinga Pro. CNIT announces the research on applying blockchain technology to innovative taping new media ecosystem, or taping new media ecosystem. I don't know what any of that means. All I know is CNIT trading up this morning 60 cents. It's $2.73 stock is trading up 20% on that headline as well. So these things break out with headlines. I don't know what the hell half of them mean, but I tell you, they pop on them.
Yeah, that just looking at the CNIT that got pop up to 380, quickly gave that back down, still trading up 56 cents though. Dennis, you were sticking up for Mr. Welsh there, and did you check out Ed Parker's comment here in the chat? And I kind of have to agree with him here. You talked about the transition to ML, but Jack did, transfer a company that had a lot of debt, and that's kind of what they're choking on now. So just a different.
Yeah, but they got him out of that after. Okay, so you could say that about so many companies too, though, back then. I mean, we didn't know the financial crisis was coming. You can say, oh, yeah, they set him up, to fail in the financial crisis, which obviously may have if Warren Buffett wouldn't have came to the rescue. But so many companies, good companies were in trouble during the financial crisis. And, that was a whole different animal there. So I don't know if you can just say, you spilled a whole bunch of debt in this company and it's your fault, Jack Welch. So what are you talking about? It's a good point, Ed. I think there's an argument to be made, though, that there's a lot of companies, especially one of GE, that's got to operate under a lot of debt. I mean, Honeywell has a lot of debt as well. So, and Honeywell has, been an unbelievable performer over the last decade, and GE is just, been horrible here. So I think, Jack, maybe you're right. There's some points there, but it's a long time. We're 16 years removed from it now. And his recent struggles for GE have absolutely nothing to do with Jack Welch.
All right. Remember when, speaking of Jack, remember when Jack and Tom used to trade the daylights out of GE at the Bright office? They were kind of like.
Too. I traded a lot too back in the day.
Yeah, with their automated keyboards and trading the bids and that's when you had a 16th or an 8 spread, so it was a little bit of.
Well, it used to be GE was a great stock to trade by. I still trade GE just because I like boring, but I tell you, it used to be $130 stock. Before they had a split, and obviously after that, it had a 3-for-1 split. But I can remember it up to $170, $180 a share. And, they ended up being the high of 60 because it did the 3-for-1 split. But it was a great stock to trade back then. Lots of volatility. You're right. We're in teenies back then. So a lot of times you could pick up halves all over the place in a stock like GE, especially back in, 1999, 2000, 2001, when stocks were a lot more volatile than they are today. So I love trading GE back in the day too. I think in our trade office, like we had, Jack and Tom that traded exclusively. I traded it a lot that one year almost exclusively. And we had almost 4 guys trading GE like pretty much nonstop. And, just making markets in it for the most part, like providing liquidity out there and trying to make the spreads. And the spreads were nice. And then those guys moved on to Intel. And obviously we had Paul there too, who was one of the first like kind of high frequency traders that we had in our firm. And, they're just making markets.
Should I tell the story when Paul brought down NASDAQ? And we got.
You can tell it again quick if you want.
We got
they weren't able to handle those order volumes back then, and Paul was hitting them so fast. Go ahead, Joel.
Just real quick, I got a call from Eddie Franco, and we got to get Eddie on. And he said, "Do you got a guy that's trading a lot of Intel?" And we're like, "Yeah. Paul has his automated keyboard. He's trading a lot of it." He goes, "Well, tell him to shut it off because he's going to have to, he's pulling down NASDAQ because his cancels are getting there before his orders." So yeah,
he was one of your original high frequency traders. Like Paul was way ahead of the curve on that. We're talking like 1999, 2000, way before there was automated trading then. And he was, one of the first guys doing it. And, he's just quick at sending those orders, obviously, and making markets and doing stuff. And, we talk a lot about high frequency trading. It's evolved so much. Like our firm, Bright Trading, was probably one of your original firms that was involved in a lot of high frequency trading. Back in 1999, 2000, 2001, we ran a lot of automation. And, I ran automation too. Like I was one of those original guys too, running automation. But we kind of backed off all that because it got to 2009, 2010. And I've backed off my automation because it just got too hard to compete with the big dogs. They all got in there kind of, ate our lunch. I mean, you can't compete with the Citadels of the world. They got, hundreds of millions of dollars at their disposal to hire the best programmers. They've got order flow arrangements. They've got so much going on. Even a lot of the other big banks are having troubles competing with a company like Citadel. So it's just changed. It's evolved so much where a lot of our guys went from working markets, making markets, doing a lot of stuff that the high frequency traders were doing, to more statistical arbitrage, where we're looking at relationships a little bit longer term. And when these relationships get out, we put positions on. So we kind of moved, and that's where the pairs, trading kind of, evolved from. And a lot of our guys, like trading the pairs and doing other things. But originally, most of the bright traders were basically, well, think about when you started, Joe, most of the bright traders in our office even, were traders from the floor. We had a lot of guys that came from the floor originally, and that's what you were doing on the floor. It was human beings making markets.
Yep. All right. It's on 9:01 here. We've got a minute over. Spencer, you want to wrap things up and preview what's on the show?
Well, before we go, I just want to run through the list of some of the biggest ratings we had this morning. Yeah, a lot of upgrades and downgrades this morning. What jumped out to me, Halliburton, they had earnings, got an upgrade at Guggenheim on the heels of that. Citigroup upgraded U.S. Steel this morning from sell to neutral. Bernstein upgraded Lowe's, LOW, from underperform to outperform, and they raised their price target from $69 to $125. So they double upgrade there from Bernstein on Lowe's. Juniper catching the upgrade from Oppenheimer. Credit Suisse upgrading Lennar from neutral to outperform, increased their price target from $67 to $81. That's really it as far as the big upgrades jumped out to me, at least. Aflac upgraded Raymond James as well, outperformed to strong buy. Okay. It's as far as downgrades go, not a ton. Apple catching a downgrade from at Atlantic Equities, overweight to neutral there. That's pretty much it. Eli Lilly downgraded at Credit Suisse, neutral to underperform, and those are the biggest ones. Anything that jumped out to you, Dennis? Or
you got most of them covered there. Yeah, the Lilly one is one that I would actually talk about here because that's going to underperform. That's equivalent to a sell rating here. So that's significant. It's down $2 in the pre-market, 83.5 right now. So a day where pharma is actually doing pretty well, this is probably going to be an underperformer.
Trading down $2. That's a big move for Lilly. Your pre-market low, 83.50, but not a lot of volume here. Go to the daily charts, and you haven't been in the 83 handle since you were made an 83.58 low. That was on November 24th. So there's actually 3 lows in that area. So let's see if you can catch a bid off 83.50. If not, your November 20th low was 82.82. But big down move here for Lilly. I mean, it'd take a lot of stock to move that. Only 4,600 shares have moved it down $2. All right, Spencer, now the official wrap.
Well, on tomorrow's show, it's Tuesday, so we've got Nick Shaheen on. He's the author of Create Income with Option Spreads. But also, if you like charts, we've got a chart guy, Steve Miller. His site is AskSlim.com. He's got some great charts of his own. So Steve and Nick will join tomorrow's show. If you want to catch any part of our show from today, any of our archives, catch our podcast, it's on iTunes, SoundCloud, and Stitcher, or you can just rewatch the show on youtube.com/Benzinga TV. Thanks to all of you who joined us in the chat this morning, and to our guest, Kiana Danielle, and those of you who chatted and watched on YouTube. Thank you to all. Hope you all have a good rest of your day. We'll be back with you tomorrow.